Hi there, back again here with me Rati in Mami Beluga Investing. This will be my first video out of SGX Straight Times Index. Yeah, previously I've been talking about SGX Straight Times Index company. Okay, this time I'm going to analyze Sheng Siong with stock symbol OV8. Okay, after looking at its business, earnings, dividend, and price movement history, I can see that first, it's a growth company and the market is valuing it as such. 2. The growth is driven by store expansion. 3. At the current price, it is very attractive for me to start a small position. So how did I come up with those 3 points above? Follow my analysis till the end. And don't forget to subscribe to get more of the same kind of contents. Okay, disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decisions. Feel free to put your comments, criticism and suggestions in the comment section below. Okay, now let's have a quick look at the company's profile. Sheng Siong Group Limited is one of the grocery retailers in Singapore. Sheng Siong was established in 1985 and listed in SGX main board since August 2011. It was started as a family business and still a family business, I think, because the top management is held by the 3 founders, their spouses, as well as their daughters and sons. It hadn't been on my radar until last year. One of the factors that the store is not available near my place. It takes me 2 buses to get to one of the nearest store. On the other hand, I have both Giant and Prime supermarket at very convenient walking distances. Okay, but from what I can see, Sheng Siong is directly competing with Dairy Farms Group, NTUC FairPrice and Prime supermarkets. However, the last 2 are not public companies. Since its establishment, it had grown to 63 stores. On the screen, we have Singapore's map with the location of Sheng Siong stores. As we can see, most of the stores are located in the west and northwest area. In 2014, it started all4u.sg for online grocery shopping platform. The last time I checked, all4u.sg had redirected me to shengsiong.com.sg. Since 2017, it had started to expand overseas with stores open in Kunming, China. As the making of this video, the largest shareholders of this company is Sheng Siong Holding Private Limited with 29.85%. Other notable names are the 3 brothers or the 3 founders. Each hold slightly more than 9% of ownership. Okay, that was a quick review of the company's profile. Now let's have a look at the company's performance. Let's start with its EPS history. So here I plotted Sheng Siong earning per share for the last 11 years. I also added a horizontal green dash line as a guide to 0 level. Earnings below this line indicate that company is recording a loss for that particular year. Quickly, let's look at the screen. Quickly, we can see that Sheng Siong has a phenomenal growth for the last 11 years. The company's profitability have grown more than 2,000% over that period. There are 2 notable sharp increases in the earnings. They are 2012 and 2020. That's interesting, right? The significant earning increase in 2012 contributed by opening of 8 new stores and offset by the closure of 1 store. Earning also improved by one-off item, that is the sale of company's Marsiling warehouse. From the company's 2020 annual report, I gathered that the earnings spike in 2020 was contributed by elevated demand for movement restriction to contain the COVID-19 spreads. To put it bluntly, Sheng Siong was benefited from panic buying situation. The 2021 first quarter report noted that the earning decrease is contributed by normalization of demand post-COVID. It was also noted that the second quarter of 2021, the company expects to generate even lower revenue as compared to the same quarter last year. We can see that the company is doing quite well for the past 11 years. Now let's look at what could be the company's growth driver. The one thing that may drive the growth is the number of stores. From what I learned from the information that I have so far. So here I add out previous EPS history plot with the number of stores since 2012 as a bar charts. Okay, number of stores have increased steadily from 33 in 2012 to 63 in 2020. We can see that Sheng Siong earnings seems to increase along with the number of the stores or opening new stores. And here I add the chart with two annotations for each of the bar chart. The number above is the number of stores and the number below is the earnings increments from each new store that opened in SGD cent. The number is in Singapore dollar cent. I derived this number by dividing the EPS with the number of stores in that particular year, in each year, in the respective year. We can see that roughly Sheng Siong increased almost 1 cent for every store it operates. Looking at how prudent it expanded, improvement in their earnings is almost predictable from number of stores that they operate. Okay, feel free to pause and look at the graph more carefully and feel free to share your thought in the comment section below. Okay, so that was an overview of Sheng Siong's earning history. Now let's take a look at the shareholders' perks. Let's look at the dividend history. To see the sensibility of dividend payout, so here, as usual, I plotted 3 layers of information. The first one is the dividend payout over the last 11 years, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the point, I have annotated with 2 numbers. The numbers above the markers are the dividend payouts in Singapore dollars, and the one below are the payout ratios to the respective year's earning per share. As a comparison to the earnings, here I plotted again, the earnings per share as a thinner red line. At a glance, I can see that Sheng Siong is really generous with its dividend payout. Sheng Siong distributed between 69 to 90% of its earnings as dividend. In 2013, it distributed more than its earnings. Normally, I would be quite anxious if a company distributed too much dividends, as it may reduce company's safety net for potential crisis. Okay, this is a new graph that I just started to use in this video. This graph helps to track the dividend yields over time, which then can be benchmarked against the yields of fixed deposit. I think it will benefit greatly to some people who invest for dividend, that is so-called the dividend hunter. So here, similar to the previous plots, I plotted the average dividend yield per year as the round markers. At each markers, I place an error bar, which represents the range of yield over that year. The variation in the year is caused by the volatility level of the share price. The yield increases if the share price decreases, and the yield decreases when the share price increases. Okay. Quickly, we can see that the dividend yield from Sheng Siong has gradually decreased for the last 8 years. That was 8% yield in 2012 and steadily down to 3.36% till 2019. The average yield goes up to almost 5% in 2020, but do note that the price fluctuated more in 2020. Historically, Sheng Siong distributed dividend twice per year, except in 2020 where it distributed dividend 3 times. In 2021, Sheng Siong has distributed almost 2% yield worth of dividend, but do note that it is potentially only half of the dividend. Okay, noting also Sheng Siong dividends yields are still better than fixed deposit interest rate from banks and Singapore saving bond, which has fell below 2% since the later part of 2019. Okay, so far so good. The next question is the price reasonable? Okay, to see the Sheng Siong market valuation, here I plotted 4 layers of information. They are: first, the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Sheng Siong and it will pop me with this graph. But price alone is sometimes misleading for the value of the company and its prospect. So I'll include some fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiply, which here I plotted as the dashed green line. 10 times earning multiply can be considered as the price where the price to earning, that is the PE ratio, is 10. For me, I consider 10 times earning multiply has 2 purposes. The first one is that it indicates that the price where I expect where I have higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is 5 years. Okay, and then secondly, as consequence for the first reason, I'll consider share price above this 10 times earning multiply to be expensive. The third layer of information is 15 times earning multiply. With the same principle as the 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as a dashed yellow line. Just like the traffic light, I'll start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crosses this line. For non-growth company, I consider to cut down my position if this happens. Okay, so now let's see what's going on with Sheng Siong share price. Quickly, we can see that the market has been carefully valuing Sheng Siong as a growth stock. The price followed the 20 earning multiply faithfully, 1-on-1 since 2012. Sheng Siong earning dip at the first quarter of 2020 is also followed by a dip in its share price. On the other hand, the spike in Sheng Siong earning by the end of 2020 doesn't seem to induce a buying frenzy. In this case, I feel the market is optimistic about the company's growth, at the same time fairly cautious about its value. Considering the company's growth, I think Sheng Siong stock price is fairly attractive. I'm pretty convenient to place some small positions around $1.5 per share. I might become more aggressive if it's ever drop below $1 per share. As of 16th of July 2021, when I prepare this video, Sheng Siong stock price is at 1.57 Singapore dollar per share. I guess it's already a good time, almost the best time for me to start a small position. Okay, so in conclusion, first, it is a growth company and the market is valuing as such. 2, the growth is driven by store expansion. 3, at the current price, it is very attractive for me to start a small position. Okay, that's all for today. Thanks for watching. Don't forget to leave your comments and please subscribe to my channel because it means a lot for me. Okay, that's all. Bye.